Good morning, everyone.
Morning.
How we doing?
We're all right. We're all right.
I think I might be getting a little bit of feedback through your speakers, maybe, Carson. Ricardo, good morning. Aiden, good morning. I think that's Patrick. I have my streamer mode on, so I can't see everyone's username. Leslie, good morning. Let's see, let me update this. We'll give a few minutes for people to come in. All right. Everyone's having a good morning so far. Sunday morning. Carson, you all right with your audio?
I'm trying to just connect my AirPods to it. Give me just a moment. If you want to start going into news, you can.
Okay. All right, I'll pull that up. Okay. All USD for next week. Okay.
Okay, I fixed my audio. Should be good.
Okay. All right. I'll let you pull it up then. Just trying to find Forex Factor here. Okay. Thanks for joining us this morning, everyone.
Alrighty. Good morning. News for this week. On Monday, we have new home sales released at 10 a.m. on Monday. On Tuesday, we have at 8:30 a.m. we have core durable goods and regular durable goods being released at 8:30 a.m. on Tuesday. At 9 o'clock, we have S&P Composite 20 HPI. I don't know what that stands for, and that's yearly. And then Tuesday at 10 a.m., you have consumer confidence and a manufacturing index as well. On Wednesday, you have FOMC member speaking at 6 p.m., so that's after the fact. That's after closing, so that doesn't really have anything to do with us watching the market during the day. Thursday, 8:30 a.m., you have final GDP quarterly and unemployment claims and a price index as well. And then at 9:45, you have a Chicago PMI. And then at 10 o'clock, you have pending home sales monthly and then a revised consumer sentiment as well. And then on Friday, to close out the week at 8:30 a.m., you have a PCE price index monthly. And then at 11:30 a.m., you have Powell speaking. So not a really crazy week with regards to news. You've got, Tuesday, Wednesday, Thursday, and Friday, I'll have at least one red folder, but nothing too crazy. Just keep, I would say keep an eye out for, the consumer sentiment and the consumer confidence, that GDP, and then Powell speaking. Any other comments, questions, or concerns on news before we get into dollar? All good? Okay. Okay, so dollar on the weekly. The idea was to see what dollar did with regards to the SIBI on the weekly. You can see we very clearly closed through it. Um, the last 2 days of the week kind of gave that signal. I actually thought price was going to go lower, and it didn't. On the weekly, a couple things that I'm noting. Just still two swings right here from this low to this high. Price came down, delivered into a discount, and then we're now trading away from that. So we want to see does price create new inefficiencies to the upside. Keep note though, we are trading just back inside our weekly SIBI, and that's something that you're going to want to note. We've got higher time frame inefficiencies here. Other than that, oh, also this price leg from this low to this high, we're now in a premium here. So if we do want to, retrace lower, I think I am switching my bias a little bit more now to the idea that this could potentially be the draw on liquidity. When you to the daily, you can see price clearly was trading from this order block back down into this daily BISI. And we wanted to see the price now that we responded lower and closed back below this area of delivering to a premium back lower. We wanted to see does this weekly SIBI now play, daily SIBI, and you can see that we clearly on Thursday just decided to just rip higher, right? So that shows me that if price is delivering into buy side imbalances and sell side inefficiencies, and it's displacing away from that, I'd be curious to note that probably the draw would be buy side now, with the idea that price could trade into this down close candle right in here, right? High, the open, the mean threshold this wick, and then continue to start working its way higher into this volume imbalance as well as this high in here. So caught, a little off guard there at the end of the week with regards to what dollar was doing, but just going to continue to follow it. It's been a little bit of a tricky one to follow lately, especially with the way it's moving with and without the tandemness of the indices. Other than that, that's really about it for me on dollar. Unless anyone has any questions. Oh, good. Okay. Sounds good.
All right, then I'll pull up the indices here. Okay. So ES and NASDAQ are both trading at all-time highs, continuing to trade higher from the monthly perspective. So no violation of discount arrays, which means we're just going to continue looking for higher prices on the monthly here. Carson, if you could just mute yourself 1 second. Some distortion come through. Thank you. All right. So I'll just jump into ES first, and then we'll look at NASDAQ. Monthly chart, just continuing to go higher. There is 4 days and 7 hours left on this candle. So waiting until the closure of this candle to really get an indication of are we likely to continue going higher into April or potentially return down into the inefficiency being created below. But as for now, just continuing to expect higher prices. So as we drop to the weekly chart, you can see that we traded through the opening price of these down close candles. So now looking at this as a bullish order block, and as long as we respect the midpoint, the mean threshold of this down close candle here, then I'd like to see price continue to trade higher and reach through the buy side up here. Okay. Dropping down to a daily, we're still showing respect for all the discount arrays below, so just trading inside this BISI right now, still trading up in the upper portion of it. So I want to see as we get into the early part of next week, how do we respect this inefficiency or disrespect it and trade down through it? And that can start to give an early indication of where we'll head into the following week and as we get into April. Okay, but as for now, since we're just respecting discount arrays and continuing to trade higher, whenever we're trading at all-time highs, until we see several instances of higher time frame PD arrays being violated, we have to continue keeping our focus on the long bias, which means we're just looking for price to trade into a discount and then continue working higher to inefficiencies and liquidity above the market. So you just look for buy side to trade up here. Okay. Moving to NASDAQ. Same idea, monthly perspective, just trading higher. We did an immediate rebalance right here, trading right there into January's high, and then trading off of that. Dropping into a weekly chart, you can see how we continued to respect the mean threshold of this down close candle here. As your bullish order block, traded off that, back up into the buy side there. And now that we've traded through the opening price here, I'm looking at this as the bullish order block going into next week. So I want to see this mean threshold respected if we are going to continue working higher. And if we do trading close through that, then we can start to gravitate back down toward the sell side. But until we see closure through, I'm just going to continue expecting higher prices. Just like on ES, we're trading at all-time highs. And when you don't see any violation of these higher time frame PD arrays, you just want to continue with that order flow and not look to fight it. Okay, so you can see buy side was purged here on the daily chart, but we're just trading inside the BISI and this series of downless candles, your bullish order block here on the daily. You could view this as your breaker as well. Okay, so that's where we made the low on Friday, just tapping into the high end right there in the overlapping portion inside this BISI, fair value gap right here. So I'd like to see price continue working up toward the buy side if we do respect this inefficiency here. All right. That pretty much covers it. Any questions here on the indices? So as for now, just continuing to look for higher prices. Lorraine, good morning to you. Sifin, good morning. And John, good morning. Okay, any questions here? Are we all set? Looks good, looks good. Okay. If you do have any questions later on, feel free to ask them. We'll go ahead and move on now to training exercise.
All right. I will see if we can pull this up. Alrighty, exercises for this week. You were supposed to, the idea behind it was to identify the high and low of the week and then trade the day following. Just trying to pull this up. Give me just a second. Okay. All right. So first one, Mr. Allen. So he says NQ continues to be bullish on a monthly time frame. NQ is also bullish on a weekly time frame. NQ low of the week was made Tuesday. This was just a basic 5-minute long, keeping in mind higher time frame bias is long, so not looking for shorts just to be safe. Waiting on Monday and Tuesday to show the clear direction was a test of my patience. The reason this trade is share worthy is because I'm still unsure about where to anchor the standard deviation fibs, but this might be right. Feel free to let me know if it is/isn't and why. Overall, my emotions subsided over time a while ago, so I felt nothing. All good there. So with that being said, we can look at his trade. I'll kind of pivot around here for a second. Okay, all right, so you can see out here, he's identifying this order block, or fair value gap. Price comes down, he's highlighting, I believe, what is to be the low of the week. From there, does it still? Okay, yeah, all right, good. I just want to make sure. All right, so from there, price goes down into this series of down close candles, utilizing it as like a higher time frame order block. If you're trying to understand where to draw the fibs to, Alan, if you're taking it from here, that's totally fine. It's definitely a fine anchor point for the standard deviations. So it looks like they're just utilizing that, trying to see if price goes higher. From there, good entry. It looks like you're entering in and around the mean threshold of this higher time frame order block with your stop loss just below it. And then I like that you're taking partials along the way. And I think that one's, yeah, I think that's it for that one. All good. I mean, it looked, for the part, it looks like it was a pretty good trade on your end. I would say, with regards to the standard deviation, you know, you can use this whole thing, or you can even use like from this high to this low. I mean, it's all relative, but I think overall, I mean, the idea of just using this as your fulcrum point is totally fine. Yeah, good trade. Henry, you got anything you want to add?
No, I think this is great. I like that you built the framework for the trade off of a higher time frame PD array and allowed your stop loss to respect that higher time frame PD array as well. This is something that is actually a really great example because it can be helpful to people who are newer in the learning stages. Is when you're just focusing on, as you're starting your learning and you're focused on how can I identify the draw on liquidity and how can I base a trade around that. One really good practice to do is enter your trades with the smallest position size possible. So just enter with 1 micro. And then instead of trying to work with a small stop loss, just put your stop loss in the furthest place from the entry where you know the trade would be incorrect at that point. And so instead of trying to jam it up right under a little fair value gap or something like that, utilize a high time frame P area like this, and then give yourself some real room on that stop loss, and then see if you can hold your trade until the draw on liquidity, or at least toward that draw on liquidity. It really starts to help you focus your attention on what is the draw and not how can I just build a trade around this idea. Because the draw is always going to be our top priority. And if you sacrifice that to the idea of, well, I want to put however much size on a trade, I'm going to jam my stop loss up, those kind of things, then that leads to a lot of issues down the line. But if you keep your attention on just identifying that draw and then putting your stop loss where it doesn't make sense for the trade to go, so of course you're still protected on the position, then you'll start to see over time you can have a lot of success with that, just identifying the draw. It also makes you feel a lot more free in the trade because you're giving it room to breathe and you're allowing that trade to play out instead of getting your stop too close up in there. So I really like the way you manage this, Alan. I think it's a great trade.
Good stuff. Good stuff. All right. Let me hop back to find it. Alrighty, Mr. Aiden waited for FOMC to let the market show me its hand after FOMC creating the last buy side curve of a higher time frame market maker model. Weekly profile as well was confirmed by FOMC as Tuesday dipped into the 1 hour order block and made on the 15th of March. I proceeded to have a soft long bias. I was aware of that ahead of Powell speaking. Price can give nice opportunities for both longs and shorts. I took a number of within Thursday and Friday. I'm now using a Top Step X account as my trading exercise. As my trading exercise now, as I have delayed data on TradingView. Here's the report from the last 2 days. Models traded the 2022 Turtle Soup, second model, and market maker model. Weekly profile, classic Tuesday low of the week, confirmed after FOMC. I think for me this week, my main takeaway was more important than figures on the screen or the quality of the trades I took. I realized that I will be very hesitant when it comes to trades that will always run 70 handles or more to my target, and I will lose most of my trades, but I'm usually jumping the gun. I have found that being a jack of all trades, while beneficial in some scenarios, isn't better than being a master at one. I have no problem saying that publicly, and the only reason my own progression is being the only reason for my own progression being subpar is not so much my knowledge, of me as a trader, and I solely am the one to blame of it. Yeah, I mean, I think one of those things where it's like, you know, I think you just said it right here, right? Just figuring out really what works for you and continuing to refine it, rather than trying to be so complex and all over the place. Let's see if I can pull up your other ones. Hold on. Okay, so it looks like this was the business from this week on the top step account that you're using for the exercise. Um, it looks like, yeah, I mean, I think, so far you're fine. I think it tells the keeping the risk tight, losses short, letting the wins get a little bit bigger. Pretty good win rate. Notice how you know you're you're keeping things right. Your losses are, you can see that there's a characteristic to your losses. They're all on average around that $100 range. Right? You have a couple ones that are a little bit bigger, but not really. It's in around the $100 range, and your average profit is around double that. Right, so it's the reward is there. Um, Good stuff. Anything you want to add, Henry?
No, I think this looks good. It looks like you're utilizing proper risk management, so uh, that'll take you far. That allows the account to continue to compound. Are there any trade screenshots for this one, or just your?
No, I don't
No,
believe that
okay,
there was
okay.
any.
All right, no
Yeah.
worries.
Okay, next one.
Thanks, Aiden.
Next one is Mr. Ranjan. Alrighty. So the narrative was Tuesday made the low of the and on FOMC. Wednesday, I was looking for a classic weekly expansion profile with the expansion days on Thursday and Friday. Given the volatility of FOMC, I decided to stay out. Went then on Thursday, I made the high of the week after taking the 18,691 and a quarter buy side liquidity on Friday. Based on the exercise rules, I was looking for a short opportunity using the TGIF. Model used was the 4-hour charts for the bearish bias. Entry was based on a unicorn setup, 5-minute breaker block and fair value gap. Duration of the trade was 32 minutes, trading at 4 micros. 2.2 risk reward. New York AM kill zone, 10:17 AM entry, 10:49 AM exit. Specific PD arrays used were the bearish breaker block, 5 and 15 minutes fair value gaps, and then the block and unicorn setup. Specific draw liquidity was sell side liquidity. Stop placement was the mean threshold of the wick of the bearish order block being used. Partials taken at 5 minutes. Partials taken at 5 minutes inside of D. Left runners for sell side liquidity, but seeing SMT divergent with the ES, I exited the trade. Time of break even on the last 2 runners. After I was good in profit. Emotions before, very calm and poised. Practicing meditation and visualization before looking at my charts in AM helps me. Emotions during, for the first time I switched from NQ to micro NQ and traded multiple micro contracts. This brought a lot of peace and removed anxiety and kept my stop loss in and was okay if I got stopped out. Emotions after my trade, I was glad that I aborted my runners after seeing the SMT divergence. Otherwise, I would have got stopped at breaking even on these 2 runners. Right? I think you had I think the big thing on this trade was just simply the exit, right? The exit, I think, was the key right here, right? I think, the entry is good. That's fine. You had your criteria, all that stuff. Price was trading into everything. And then, I think the entry is great. Don't get me wrong. But I think the main thing here is being quick to sit there and, have enough with the trade and be nimble enough to react and close up shop. And, it's not always gonna, be like this. And sometimes you might do this and it might continue going lower. And I would say it is good though to try to at least always hold one, because you never really know. Even though this worked out and you were confident, it's nice to always have at least one little runner. Especially you're just trading the micros. But this is really good. This shows the idea of you understood, real time that there was thing going on with these lows with regards to SMT, and that can signal something with regards to a potential reversal. And yeah, I think the exit's great here. You want to add anything?
I think great exit as well. Uh, the S&T is important there, just given the fact that I think this is Friday's trading, so it looks like we were inside the daily BISI as well. So you had a point of interest down there where you could actually move higher from. So I think you managed this really well in terms of your exit. I'm really happy to see that you switched to trading the micros. I think that's going to do a lot for your improving your trading psychology and allowing you to stay in these trades a little bit longer and stay focused on that draw and liquidity. So really nice job this week, Ramjan. I like it.
Good stuff. Here's the business. Keeping it short and sweet. Good stuff. All right, so let me pull up Kate's really quick. Let me see if I can find this. Not that. Give me just a second. Okay. This is Kate. I'm gonna switch things. Sorry, we're trying something else out, by the way, on these exercises, so just bear with us. All right, so this is Kate's with regards to her trading exercise. Her narrative was after hitting all-time highs, price action became race-bound. I thought we could potentially make one more push up into the equilibrium on calling EQ of the consolidation. Bias was bullish. Trade idea, price swept the liquidity yet again and dipped into a 15-minute C in an optimal trade entry. All-time highs was already taken, so I wasn't necessarily thinking we could challenge the new all-time highs. I was simply playing within the consolidation and targeting the internal resistance liquidity after external resistance liquidity was taken, or range, internal range liquidity after external range liquidity was taken. I used a 4-minute volume imbalance, also a 1-minute BISI as my long entry. Emotions neutral. During neutral, I knew my entry was pretty good, so I just needed to let price do its thing. After neutral, I briefly entertained moving my take profit further, but decided not to be greedy. Happy with enough. So from there, we'll go into. Whoa. Okay. All right, so you can see price trades into the daily BISI and see how price responds here, going into that -2 to 2.5 in here. Reversing, going higher, you can see the change in state of delivery on Tuesday. From there, taking what Tuesday does right here as a fulcrum, extending it out, seeing where that lines up. And from there, once price takes the all-time highs, you can see that she's in here, right, playing in here. And I think, yeah. All right, so letting price, duration 15 minutes, draw liquidity was the 8:30 open, 1 mini, previous low, no partials, 1 to 2.94. Time of the day, New York AM, break even after price respected block. So very good entry in here, very good, like to be able to be patient, let price come all the way back down into this volume imbalance. Good entry, good stop placement. Price had already delivered here, created volume imbalance off of this array. And just like you said, net internal range liquidity and not necessarily needing that external range liquidity to play. Because you could see that would have been very tricky as a trader if your stop loss or if your take profit was right here. How frustrating would that have been? Right? It would have been super frustrating. That's why you had the idea to play the internal range liquidity, which is super smart. Anything here, Henry, that you want to touch on?
I like to I mean, no, not really. This is another good one, Kate. I like the like we already touched on, just utilizing that internal range liquidity. It looks like you took profit at the 830 open too. So just noting the fact that if we are going to continue going lower, above that 830 open is where the best selling opportunities are going to come at. So great choice of exit right there, 830 open. And I think we might have on this day actually had a bit of a S&T up at the highs there when NASDAQ failed to purge the high as well. So solid, really nice.
Good stuff.
Let's see.
Here's the business. Not too bad, Miss Kate. Not too shabby.
Let's see. You
Alrighty.
had some commentary after as well. After the trade, realized that there was a trade that fulfilled the requirements of this exercise better. It was a short in the PM session. We had an important level, all-time high, in the negative 2.5 standard deviation, anchored from Tuesday's swing low. Do you have this picture, Carson?
Yeah. Hold on. It's right here.
Okay.
Yeah, so just talking about after seeing the S&T at the highs.
Yeah, so
Utilizing
identifying that
those.
the high of week is likely in, so you're just playing that move back down into the range and looking for the short opportunity. That looks pretty
Not bad.
solid. I like that. Yeah, but good stuff. You stuck with the one trade that you were supposed to take. Didn't go back into the market again. And very good.
Good stuff. Alrighty. So with regards to that, for the training exercise center, you can actually talk on the training exercise for this upcoming week.
Okay. Just one moment. All right. So as for the training exercise this week, you can see it in Discord. It's listed in the training exercises, exercise 28. The idea behind this task is practicing patience. You will only get one trade opportunity this week. It's up to your discretion to determine when the conditions are most favorable for your trading. So please be sure to include in your journal submission why you chose to trade when you did. So think about the weekly profile, high time frame bias, time of day, what might influence that decision for you in terms of this is the highest probability opportunity that I may see all week and I want to trade now. So that's what you're looking for in this week, staying patient, waiting till all the factors are aligned in your favor, and then you're taking your trade based off of that. It's one trade, so no matter if you win or lose the trade, that's the only trade to take for the week. And then, like usual, you want to be targeting specific liquidity pool or inefficiency. Here are your parameters for ES, NQ, and Forex. Always use your stop loss, of course, and then just make sure in that journal entry that you're including why you chose to trade when you did there. So what led you to that decision, and how did you identify that the conditions were optimal there? Any questions on this upcoming exercise?
Sounds good.
Okay, looks like we're
Well,
all good.
sounds good. I'll leave you guys with this. So I was able to I completed 75 hard. Friday was my last day. And if you can't tell, I'm a little bit in recovery state right now because I have just been doing nothing but celebrating over the past 2 days. So my nights have been a lot later than they were over the past 2.5 months. But thinking like what is one thing that I can share with them after doing completing this, and what's one takeaway that I really got? What's one thing that if I could sit there and say that I took from this, what would be something that I think is like the most highlighted? And I would say it would be this. people who truly want change find it. If you, whatever it is in life, mentally, physically, financially, whatever it is, like if you truly want change, you know what it takes. You know, like it's not rocket science. It's just the thing that I learned through this is that every single day is not going to be easy. A lot of them were, but there was 10 to 15 days throughout the entire 75 days where it just was not fun. It was hard. I could have made any and every excuse to not do certain things. And I think it's on those days you really start to realize, like out of the 75 days that I did, there was really probably 8 to 10 days that really like changed me because it was not making an excuse to do something that I didn't want to do. And I think that that was the biggest thing is so many times in so many areas in our life, we find reasons to not do certain things or do certain things. And if you learn that your instant success is on the other side of that, like your success is in the you're avoiding. And when you start to not avoid that and you start to tackle everything face on and not make the excuse, you'll find success. Like it's not easy to do, but it's easy not to do. It's right around the corner. So it has been fun, but at the end of the day, I'm just going to continue to try to maintain a healthy balance with regards to my fit life and stuff like that. Was a little bit rusty drinking. Wasn't I was not I did not miss the hangovers. I can tell you that. But I've done my celebrating, and it's just gonna kind of go back to the main maintenance of it all, and continue to live a healthy work life balance. But yeah, it was fun. It was cool. Um, but my 75-day goal really was to just I wanted to gain 20 pounds of muscle. That was like my big thing. And I gained 23 pounds throughout the 75 days. But yeah, short call. We've got we've got a couple things that will kind of go out later in the week with regards to potentially next week's call. I will be in Charlotte visiting Henry. So it is also I think Friday is a bank holiday. Is Friday a bank holiday?
I think it is a market holiday, first Friday. I have to look at what the.
Because I know like the
It looks like I don't know. I'm not sure if it's affecting the actual trading day for futures or not. It may just be across other asset classes.
Yeah.
I'll have to look into that.
But yeah, other than that, enjoy your weekend, the rest of your weekend. Enjoy your week. Trade safe. Do the right things. Listen to your heart. And have fun doing it.
Sounds good to
I'm
me.
good there.
All right. Well, we'll be back to normal this week. We'll be streaming tomorrow morning, 8:45 for morning chart and chat, and then of course we'll have a Monday stream after that. And then make sure to go into the 2022 study series and look at the schedule again there for the call tomorrow night. Let's see, we'll be looking at episodes 3 and 4. That's internal range liquidity and market structure shifts and examples. So make sure that you take some time to watch those episodes 3 and 4 in advance. Bring your notes, bring your questions, and at 8 p.m. we will have the second episode or second session for that 2022 study series, which I'm really excited for. It's good going back through the material again, and I know it's going to be a lot of learning for a lot of folks here, and a good refresh for myself as well. But that is all from me. I hope everyone enjoys the rest of your day. Stay safe, and we'll see you in the markets this week. Take care, everyone.
Peace.